Okay, here comes video Monday, the 17th of January 2022. It's just gone 4:01 p.m. Chicago time. Do hope you are doing well. So today in the US, it is Martin Luther King Jr. Day, and so the markets are shut today. But the only thing going is the crypto markets, Bitcoin, Ethereum, etc. They're running 24/7, so that's about the only trading kind of going on today. And on this day off, I thought I would do a little how-to video about tick charts and TradeStation. And I've entitled this one 3 Tick Chart Tricks I've Learned from Over 10 Years Using TradeStation. And to be honest, I'm a little embarrassed that I didn't know these particular nuances of using tick charts on TradeStation. I've been using tick charts on TradeStations for so many years. It's only in the last 2 or 3 years that I've made these adjustments to my chart settings, and I'm kind of surprised I didn't know this earlier. I think it actually points to a weakness in TradeStation that I shouldn't have to make these particular changes that I'm going to suggest to you on your charts for tick charts. They should actually be built in by default. We're going to talk about 3 different things. The first thing is the rollover of continuous contracts and how to do that, I believe, kind of properly in your TradeStation tick charts. The second one is to talk about the different tick chart settings that you can use for trading different markets and how to have a consistent kind of chart set up between different markets. And the third one is to talk about a particular crypto setting which I believe is wrong in TradeStation and that you should be adjusting for in your charts. So first of all, let's get to the first one, which is continuous contracts and the rollover date. At ES is kind of the contract that everybody knows, the continuous contract where we concatenate all of the different futures markets, where we have rollovers every quarter, 4 times a year, and each of those contracts are joined together so that we can look at a continuous contract. At some point, I think we're going to do futures markets without expiries and so on, and we'll just have delivery dates kind of agreed, and this kind of rollover idea, I think, will kind of die a death. But until that date, we have to deal with this kind of joining together of different contracts between the quarters. Now, in the standard chart at ES, here's a 1440-minute chart which allows me to look at the internal data, and this is a tick count indicated below the price bars themselves. On the last rollover date, which was on the 9th of December, you can see here this particular bar I want to highlight to you, and that red little dot kind of at the bottom of that line. I don't know if you can hear the roosters going off in the background, but on the island of Kauai we've got wild chickens running around, so if you hear a rooster going off, that's exactly what's going on. So if I'm looking at this bar, it's showing me the tick volume on that day was 119,000 ticks during that day. Now, that is unusually low when you look at kind of the bars surrounding that, and that is because TradeStation is rolling over from one contract to the next on the 7th day before expiry. Now, I think that's wrong, because on that day that expiring contract is still being traded, and we know that because we can make a setting adjustment for the symbol in order to plot a different rollover date. So if we do that, we add these little kind of symbols after at ES. So at ES becomes equals 106XC. And what that means, a little bit complicated, but that means to roll the data 6 days before the expiry. The 6 is for 6 days, and the X is before the expiry of the contract. And if we do that, again looking at the same data, on this chart here, you can see we actually had 774,000 contract traded on that date. So I think that TradeStation is rolling incorrectly from a trader's perspective too early, and what should be an easy chart to plot at ES is actually not accurate because if you adjust for the rollover on the 6th day before expiry, we capture the full volume of what is going on. So I know, I think one of my subscribers pointed that out to me kind of years ago, and I made the adjustment on the E-mini chart. But for whatever reason, I kind of never thought it was a problem on any of the other charts until I looked a little bit deeper. And looking a little bit deeper, you need to this is what I believe you need to do. Set up your charts a couple of different ways. using the expiry date, and you can also use the notice date, and putting that little indicator on the bottom of the charts here with an average number of ticks per day. This gives you, for example, the continuous contracts 762 average ticks per chart. And what you'll see is that if we adjust the data on the chart to a 106XC, as this chart over here shows, that exact same indicator is showing a value, an average of 771,000 ticks. So on average, that's what's going through. So because I've made that adjustment, it is now counting the maximum volume that's going through. It's adjusting the rollover day on the chart so that the rollover day now includes that seventh day of trading of the old contract. And this value is now higher than this value. The 770,000 is higher than the 761 because that one day each quarter is not counting the full volume. And to be accurate, what I do is go through each of the days. So we've got the continuous contract at ES, and then I go through each of the sequence 100, 101, 102, 103, 104, and so on, XC, all the way up to 114 XC. So I've tested all days before expiry, and to see which of these charts, which of these symbols captures the maximum amount of trading. So all the trading that's being captured, you'll see 770 is the highest value. So we've got 742, 32, 600, 600, 703, 752. You get the picture. So that is what's in your standard charts using at ES. If we make this adjustment here, this gives me the highest number of ticks or trades being captured by the chart. Now, I hope that makes sense. So what I've done is gone through each of the futures symbols, and I've tested against the expiry date, XC, and then the notification date, NC. The E-mini, for whatever reason, doesn't allow you, or TradeStation with the E-mini doesn't allow you to do an NC number of days before the notification. But, for example, here's live cattle, LC. Going on here, and we can see these are all the dates, 101 NC and so on all the way. And what we see is the maximum number of ticks counted is when we have 14 days before notification, 10,574 trades, ticks going through on average, and that's the highest value there. So I know that's a lot of work. I've kind of done the work, captured all of this data on screenshots and so on, and then summarized it with the tick chart settings for other markets. So if you're a subscriber to the Emini-Watch Better Indicators, you'll have access to this Google Sheet with all the information. And here we've got all the symbols for each of the futures markets, and my recommendation of the continuous contract we should be using. On the futures contracts, normally you put at AD, for example, for the Aussie dollar, the continuous contract of the Aussie dollar. If we add in this equals 101 XC, it rolls on one day prior to the expiry date, and that will give you a different chart, a fuller chart capturing all of the trading with the correct rollover day. So you'll see that on each of these markets. Some of them are great. You know, some of the big ones, for example, crude oil is correct for whatever reason. Don't know why they've done that correctly. And copper is correct, but things like cocoa, coffee, corn, and so on, we need to make an adjustment. Gold, no, gold looks like it's correct, but you know, heating oil is wrong, natural gas is wrong. And for example, on the 10-year bonds or the 30 years, I think it should be 2 days before the notification date, captures most of the volume there. So you'll see that if you're a subscriber to the indicators, you can go to that spreadsheet and you can see what I'm recommending for those continuous contract settings. So I hope that's kind of explained as accurately as I can, but I think this is something that TradeStation should be setting up correctly in default. But as soon as they do it in their default settings, you know, the back history boys will scream and shout because all of a sudden you've changed all their back history. So there we go. That's kind of tip number one, and it's definitely in the weeds, so I apologize for that. The second one is, again, going back to this spreadsheet that we had open. I'll just squeeze that up a little bit. That we need to adjust for different markets for the amount of activity that kind of goes through. I like, my day trading charts using something like a 500 and 1500 tip bar chart for trading the E-mini, and this is what I recommend the settings should be for the different tip bar charts. And just as an aside, if you're trading the micro E-mini, the MES contract, what you should be doing is charting the highest liquidity version of that market, which would be the E-mini, but then taking your trades on the micro E-mini contract, if that makes sense. There's very little difference between the two. There's so much arbitrage happening between the larger contract, the E-mini contract, and the micro E-mini contract, but they're pretty much trading absolutely kind of together in sync. But you should chart the larger, the more liquid market in order to generate your signals. They'll be more accurate then, and then take your trades if you're trading the micro E-mini in the MES contract. But as soon as we start kind of going up to swing trading or holding a little bit longer, we want something more akin to like an hourly chart kind of going through. And it's always kind of bothered me that we have different volatility in different markets, different number of trades. So for example, the euro trades a lot more than the Aussie dollar, for example, by a factor of almost 2. So how do we adjust for that? And my recommendation is this, is that we count the number of trades that happen every day on average in a particular market, and then divide by the number of hours that market trades for. So we're lucky the E-mini is trading 23 hours a day because it now has a break between 4 p.m. and 5 p.m. and trade kind of restarts. So in the calculations here, I can calculate on average in the last year how many trades went through a day, and we have about 800,000 trades. So that's 807,000 ticks or trades happening at a day. And if a day on average is, a day is 23 hours trading of that particular market, divide one by the other, and we get about 35,000 ticks or trades per hour. Now for the euro, for example, here, the euro is also trading those same hours, 23 hours a day. We've got roughly on the futures market of the euro contract about 99,000 trades per day, which equates to about 4,300 ticks trades per hour. And so what I'm suggesting is that what you use for your tip bar settings for the euro chart is something like, the 500, 1500, 4500. That 4500 is very close to the 4300 trades in an hour. And so that highest time frame tip bar chart is roughly an hourly chart, which is a good chart to look at. If you want to be going up a time frame, I'd look at, a third of the day. So 3 bars per daily chart, and if we know there are 23 hours traded a day in the euro chart, a third of that is 460 minutes. So you can set up a 460 minute chart and a daily chart, and that'll give you kind of 2 time frames at that upper level to be able to swing trade. But if you're more kind of day trading or holding overnight, using a 500 to 4500 tip bar chart sequence would work. Some of these markets trade very infrequently. So for example, we have the cocoa market here is trading from 4:45 a.m. to 1:30 p.m. It's only 8 3/4 of an hour trading a day. And then that cocoa contract's only trading about 9,000 contracts a day, which works out about 1,000 contracts per hour. So if you're looking at, day trading kind of time frame, that sets you down at about 125 tip bar charts, multiples of those above. So I use a multiple of 3, multiply each of those by 3, and that gives you roughly, tip bar settings to use here. And then if the daily chart is 8 3/4 hours, 1/3 of that is 175 minutes. So you could use a daily chart and a 175-minute chart if you're trading something like cocoa. For coffee, it ends up being 185 minutes because that's trading a little bit longer, because that's trading 9 1/4 hours a day. So I've done the hard work to figure out the number of hours that are traded for each of these markets and made this kind of little spreadsheet here for calculating those kind of settings. So again, if you're a subscriber, go to these, you can get a good sense of what is going on. The useful little indicator that I'm using to figure out the tick counts by market is this one. Again, it's just a tick volume kind of counter here, and I'm looking at the last year's average number of trades kind of going through, and I'll adjust this spreadsheet once a year. There's not a huge amount of movement around these values from year to year, so I've kind of stabilized on these kind of settings for a while now. I've just expanded on them to include day and swing and long-term trading kind of settings that we have here. So there we go. Again, another little kind of useful tip or trick in order to calculate your tick bar settings for your favorite markets that you trade. Lastly, crypto and how TradeStation deals with crypto. And I think I've said over the last several months that BTC USD is my favorite contract to use. It shows up in the Forex listing of contracts for TradeStation. Not particularly sure why that is, but you'll find it here if you look it up in this settings here. So BTC USD. They've got Bitcoin Cash as well, Ethereum, and a few others, but that's about it. But the problems I have with this is the default settings for TradeStation for those contracts, the Ethereum and the Bitcoin contracts, is that the data is not 24/7. It's only 24/6, and I'm not sure why they have done that. You can see this in this particular comparison between these two charts. This is a daily chart of that contract, BTC USD, and a 1440 minutes. There are 1440 minutes in 24 hours, and there's different settings for these two charts. But this is what's important to look at here, is these particular dates, where you can see this activity on this chart down here we had happening during December the 4th, and that was the end of December the 4th. That's December the 5th, and then December the 6th. On this chart here, you can see we have the December the 3rd, and then we jump to December the 6th. So that weekend activity is not being captured. And when you go to the settings of this daily chart here, you go to properties and you look up the sessions, you can see that they're missing some data here. The data is not being captured on Sundays. So effectively this is a 24/6 chart, whereas those markets are actually trading during that weekend period. So what you need to do in TradeStation is you need to use a 1440 minute chart, because that then enables you to set up a custom session here. So that adjustment is not an option when you use this chart. So let me just show you that. If you go to there and you click on that, we can only use regular sessions, and the options that we have, we can just override these settings here. But rather than doing that, because if you override these settings, you don't know what TradeStation might do in the future. They might, on the next iteration version of the software, these might be all overwritten back to kind of normal. So rather than do that, what I suggest you do is set up a custom session. So we go to format symbol, and we go here, and we could, under custom sessions, what I've done is just created a template called 24/7, and you can look at that, where it captures all of the data. And what we have to do is go between Sunday kind of midnight and go to Saturday a minute before midnight in order to capture all of that data. And you can see there everything's green there, with the exception of that minute between break of one week and the beginning of the next. And that's just a little kind of glitch that we have to deal with, because we can't actually capture all of that. But by doing that, you can now use a 24/7 chart, and because the weekends are very active for Bitcoin, you're going to capture this activity here. What have we got going on at the moment here? So on this old chart, the 17th, that's the end. You can see we've jumped from the 14th to the 17th, and that's not correct. We're trading over the weekend, so this one's gone. So we've gone from the 14th to the 15th to the 16th. That's a minute before the end of the beginning of the 16th, and then we've got the 17th bar, and we're currently creating, because it's Monday the 17th, we're creating the bar for closing on the beginning of the 18th. So we're capturing information over the weekend in this chart with the 24/7 setting that we are not capturing with the default settings for Bitcoin in TradeStation. So there we go. That's pretty heavy a video to lay on you. It's just for the TradeStation users, and it's really just for the people who want to be down in the weeds with me on the tip bar settings. But if you do look at my charts, with the different tick bar settings and think, what the hell's he doing? Why isn't everything just a 500 or a 1500 tick bar chart? That is the reason why I'm adjusting for the different rollover dates. I'm adjusting for the different activity in the markets, and I'm adjusting for kind of weekend trading in the cryptos. And I think those are valid adjustments that we should be making to our charts. So if you're having some time off on Monday, I hope you're having a good time, and I'm looking forward to the markets reopening for Tuesday.